How can we navigate the intricate world of finance, risk management, and the future of currency? Let's delve into an insightful exploration that unveils the dynamics at play in the economic landscape. The speaker highlights an ongoing economic war, a perpetual competition between governments, corporations, institutions, families, and individuals for control over the vast sea of capital, which amounts to a staggering $900 trillion globally. In the speaker's view, money is synonymous with economic energy, and capital represents this economic energy. It becomes evident that over the past century, governments have consistently engaged in strategies to increase their wealth, whether through wars, legislation, or the printing of currency. Against this backdrop, the speaker introduces Bitcoin as a smart asset class, positioned at around $500 billion during the summer, in contrast to the $900 trillion capital distribution. The erosion of the US dollar's value becomes a focal point, as the speaker contends that the dollar has been steadily losing ground against various asset classes. Contrary to the commonly cited inflation rate of 2%, the speaker asserts that the true devaluation of the dollar is around 7% annually over the last century. This discrepancy arises from the narrow focus on consumer goods inflation, overlooking higher rates like the Producer Price Index and asset inflation. The speaker employs a vivid analogy by comparing the devaluation of the dollar against beachfront property in Miami. The fixed nature of such desirable real estate underscores its scarcity, making it an ideal yardstick. The exponential rise in its value, from $10,000 to $20 million per acre over the last century, serves as a stark example of the impact of expanding money supply on the prices of finite resources. This scarcity principle, the speaker argues, positions beachfront property as a stronger currency than the US dollar. International currencies, in contrast, are depicted as collapsing at an even faster rate, with examples like the Rupee, Rial, Pakistani currency, Turkish Lira, and Peso losing significant percentages against the US dollar. This underscores the global trend of currency devaluation against scarce and desirable assets, emphasizing the importance of understanding the true value of wealth preservation. The speaker unveils a revealing perspective on investment gains, challenging the conventional notion that astute investment strategies outperform inflation. By juxtaposing the money supply's trajectory with the S&P index, the speaker contends that portfolios of companies merely track the inflation rate, as gains are offset by chaos, destruction, and risk. This challenges the common narrative that investment gains equate to genuine economic growth. Robert Kiyosaki's warnings about a potential market collapse, a Great Depression, and the importance of being prepared with assets like gold, silver, and Bitcoin are cited. Jamie Dimon's caution about potential economic pitfalls and Rick Edelman's anticipation of SEC approval for Bitcoin ETFs, enabling financial advisors to offer them as investment products, further add to the perspective on the financial landscape. As we navigate these complex waters, it's crucial for everyday Americans to share their thoughts on these economic dynamics. What are their concerns, insights, or strategies for wealth preservation in the face of potential economic challenges? Leave your thoughts and comments above, and let's continue this dialogue about the future of finance and the role of assets like Bitcoin in shaping our financial journey.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.